Today, Voyager Digital gets approval for $2 million in employee bonuses. Crypto ATM company Bitcoin Depot strikes a near $1 billion SPAC deal to list on the NASDAQ. And California politicians gear up to accept crypto campaign contributions in the midterms. Welcome to CNBC's Crypto World. I'm Jordan Smith. Digital assets seeing modest gains today as investors wait for details out of the Federal Reserve meeting in Jackson Hole, Wyoming. By noon Eastern, Bitcoin traded pretty much flat for the day, and Ether jumped to $1,700, with much of those gains coming thanks to signs that the merge will happen next month. Then there's Tether. Now, its price doesn't change and it's pegged to $1, but the stablecoin issuer did cause a stir when it said it wouldn't abide by US sanctions on Tornado Cash, the crypto protocol used to hide illicit crypto transactions. Crypto World's Tanea McKeel spoke to Tether co-founder Reeve Collins about that decision.
Thank you for joining. We are here to talk about Tether today, which has publicly resisted sanctions by the Treasury Department against Tornado Cash. What do you make of that decision and how significant is it?
Well, the sanctioning of Tornado Cash by the Treasury is very significant because it's the first time, or one of the first times, that a government has just sanctioned code. Because Tornado Cash is a system that was put out there. It's code written by anonymous people, and they're sanctioning the use of that. And on one hand, code is free speech, and so there's a lot of people arguing about that. On the other hand, in this instance, it is believed by the US Treasury that that code is being used for money laundering. So it's a really sticky situation. And the question that has come up is Tether, one of the largest stable coins, is not freezing those accounts. But in reality, Tether has not been contacted by anyone. According to all the press releases that I've read, it states that Tether, no one's contacted them yet. It's just that Tornado Cash has been sanctioned. So I believe once they're contacted, then they'll have a decision to make as whether or not to follow that. I believe that they probably would, but only time will tell.
You know, they've been public about their stance and, fair enough, the point that they haven't been contacted. Is there any reason that the company should be concerned, or are there any legal risks or repercussions at this time when they, supposedly have not been contacted? Or is there anything that they should be concerned about with regard to the stance that they're taking so publicly?
Well, the difference between, for instance, Circle and USDC, who, when the sanctions came out, they actually stopped taking those transactions. Circle is a US-based company and takes US customers and is governed by the US government. Tether is not a US-based company and does not accept deposits or customers from the US, and therefore they're under a slightly different jurisdiction. But that's what raises a really interesting point here, which is this new technology, blockchain in general, and the way it's being used is to do financial transactions on a global level. This has never been possible before. So before the advent of technology, all the uses of currencies, for the most part, was ring-fenced within a country and much easier for governments to control and to regulate. However, now that these technologies are there to make transactions global, almost instant, almost free, it's very difficult for the governments of the world to control how they're used. And so we're on a new frontier. And so there's a bit of chaos and it's a bumpy ride because it's a gray area and the regulations have not caught up with the technology. A lot of the people in the industry are welcoming regulations. A lot of the major players want regulations because then they can operate completely above board in a way that they know that's above board. Right now, I believe the majority of the big companies are doing their best to operate above board, even though there's no regulations. And so over time, the regulations will catch up with the advancing technology and we'll reach this equilibrium where it is safe for users to use these large companies that use this technology and for users to transact globally with these currencies in a way that they know is also covered by the government and they're not doing anything illegal. But it's still early days, and at the moment, it's the new frontier.
What kind of year has it been like for stablecoins as you see it, and where do you see it going next?
Well, my prediction for stablecoins is that they will be stable. So that's one prediction I can make with a fair bit of confidence. Unlike when people say, where's Bitcoin and Ethereum going? Well, that's going to go up and down. But stablecoins will be stable. There was a shakeout and Terra Luna, obviously, with the crash there. But that was an algorithmic stablecoin, which we've covered in the past. It's an experiment, and that experiment failed. But asset-backed stablecoins have proven the test of time now for almost 10 years and tens and hundreds of billions of dollars of transactions that they'll hold their peg. So So I believe stablecoins are going to be more and more important as the industry grows, because they're the foundation. It's the technology and it's the ability to do these transactions with a currency that you're familiar with, dollars, euros, yen. So it's a very important part of the ecosystem.
Are algorithmic stablecoins doomed forever, or do you see a future for them?
It's a tricky question. I would say for the most part, it's going to take quite a while for people to place their trust in something like that, because there's always a black swan event that will break the algorithm. And someone will try to manipulate it, like potentially happened last time, and it will crash the token. So I don't see why. There'd be great benefits if someone can figure that out, because then you don't need to park billions of dollars of cash to back those tokens. However, without that, or without a government guaranteeing that token, I don't see how anyone's going to purely place their trust at the tens of billions of dollars level in an algorithm.
All right, on to the top stories. First, Bitcoin Depot is going public. The crypto ATM company will list on the NASDAQ as part of an $855 million deal. The company reported more than 7,000 locations across the US and Canada, along with $1.2 billion in transaction volume since 2016. Bitcoin Depot said in a statement that the deal is expected to close in the first quarter of 2023. Next, bankrupt crypto broker Voyager Digital just got sign-off to pay employee bonuses. The New York Bankruptcy Court approved the firm's motion to pay out $1.9 million in employee retention bonuses after creditors filed a motion on August 19th to freeze the payouts. According to court filings, Voyager and the creditors reached a deal to let those payments go through as bankruptcy proceedings continued. Last, Coinbase just announced a new token for staked Ether. Coinbase Wrapped Staked ETH operates on the Ethereum network and lets Coinbase customers use their staked Ether while still earning rewards. The tokens are expected to start trading on August 25th, and Coinbase said it hopes that CBETH will be used to trade, transfer, and use the cryptocurrency in DeFi applications. All right, for our main story of the day, we're keeping our eye on the midterm elections. Lots of crypto-friendly candidates are running all over the country. And here in California, state and local candidates can soon raise funds in crypto. That's thanks to a rules change by election regulators in the state. Crypto World's Mackenzie Segallo spoke to regulators about that change and what protections are in place.
Political campaigns could soon accept cryptocurrencies in California. That's thanks to a rules change from the Fair Political Practices Commission, which voted in July to overturn a 2018 ban on crypto contributions. Now, California is joining a dozen states, along with DC, and allowing politicians at the state and local level to collect crypto for campaign funds.
We had heard that more and more people in the intervening 4 years had an interest in expressing themselves using cryptocurrency. And so we looked at this, we saw that there are a lot of other states that have more permissive rules than we have. The federal rules are more permissive than what we had. And so we decided the time was right to take a second look at this.
The contributions are treated as an in-kind donation, meaning that the crypto is seen as a gift rather than money. The campaigns then have to immediately convert the crypto into cash. This rule change is already garnering attention from candidates across the state who are looking to follow a similar model as elected leaders at the federal level who are already allowed to collect crypto donations for national campaigns. Erica Rhodes is a congressional candidate in Sherman Oaks. She's pro-Bitcoin, and her campaign has even drawn attention from some of Bitcoin's biggest fans, like Jack Dorsey. And then there's Greg Tanaka, a former congressional candidate in Palo Alto, who says that crypto donations mean more voters can donate.
It was like the infrastructure bill plus bills similar to this that make it very difficult, if not impossible, for people to comply with, as well as the regulatory uncertainty. And so that's my motivation for running. And because that was my motivation for running, a lot of people in the industry wanted to back me. So that's why I did fundraising in crypto. I think part of it is that some of the people who donated had crypto assets and they didn't want to pay capital gains tax on it. So they'd rather just donate it than sell it into US dollar and recognize the capital gains. I think that's the way they saw it.
But that access also means there are extra hoops involved for donors. Think requirements like crypto protocols that keep bad actors out of campaign finance.
We're concerned about circumvention of the contribution limits. We're concerned about not knowing the correct identification of the donor. And those were problems 4 years ago that in the intervening time, we see that we have some better solutions for now.
This new rule means that donations have to come through protocols that implement KYC or know your customer procedures. That way, campaigns and regulators can be assured that only US citizens are donating.
What my campaign did is we actually set up a DAO And the DAO acted as intermediary to make sure that our campaign didn't take in donations from foreign entities and didn't take donations more than a certain campaign limit.
Now, this change isn't in full effect until September, but that's just in time for the thick of midterms. Still, California isn't expecting a huge influx of crypto donations just yet.
Certainly, we don't see evidence of that this year, and our regulation just went into effect recently, so I doubt we're going to see any significant uptick this year.
And as for 2024?
I think you never know. I mean, we saw with digital political advertisement, we went from just a couple $100,000 to $1 billion in just a couple election cycles. So I think it's conceivable we see the same thing with Bitcoin and cryptocurrency going forward.
All right, that's all for Crypto World today, but we'll be back again tomorrow, and we'll see you then.